Hey, what's up, everybody? Welcome to the Average Joe Dividends YouTube channel. It's Monday, so you know what that means. It's time to buy some more dividend-paying stocks. If you've been following this journey, welcome back. If you're new to the channel, please subscribe so that you do not miss future videos. Also, please click the like button to help grow this channel and get the word out on dividend growth investing, getting paid just for owning stocks. This is what dividend growth investing is all about. This is my Monday buy video, but it may become my Tuesday buy video. I was going to actually do that this morning, but my $100 transferred over and I had auto invest on. So these are the picks pretty much with the algorithm and with the weighting of how my portfolio is, but we'll go into that in just a moment and I'll show you what stocks those were. It was 3 of them. I usually do 5. So I'm thinking of what I'm going to do going forward is on one day, I'm going to do this 2 videos in a week. On one day, I'll do $100 where the M1 algorithm picks what stocks I buy. So essentially, I'm dollar cost averaging into the stocks that went down. And then on either a Thursday or Friday, what I'll do is I'll pick then the 5 stocks of my choice and out the algorithm and put $20 into 5 stocks. So let's just take a look at the last month performance of this portfolio. Just slightly down, pretty much flat. We'll bounce out like to 3 months, up 3%. We'll go over the last year and still up 16.92 cents. And I think we've had a positive day so far today. Actually, yeah, a pretty good day of 0.67% up. And that's no surprise because, you know, the market as a whole is up. So let's go into the activity log. And again, these were selected by M1, these 3 buys. Before I do that, let's go back to the portfolio. I'll show you kind of how the algorithm works. It's based on how you weight things by percentage, and you can see my ETFs bucket, which contains, right now there's 2 things in it, SCHD and BST, and right now this one is overweighted right now, so it's not going to put the money into the ETFs. But the other 2 slices, the dividend portfolio, that's underweighted right now by 0.4%. And the 12 more dividends portfolio, this one is underweighted by 0.2%. But I already looked at the activity and see what was bought. It bought 3 things from the 12 more dividend slice. And what I may do is roll these 12 and put them right into the dividend portfolio. We'll see. I just haven't taken the time to do that. And then for my other videos, like I said, I'm going to do the 5 picks and then also the algorithm picks. But you can see we're kind of underweighted in some of these. What I may do is I may put in like $1,000 to kind of put things even where we catch up so everything is pretty much at their target and not so far off where we have the ETFs overweighted. It may take more than it may take more than 1,000, maybe 2,000. We'll see when I do that too. I'll probably pick a down day to kind of do that, even though I'm not really trying to market time too much. I usually dollar cost average on a regular schedule, kind of like how you do a 401k with every paycheck. I will make a deposit and buy more. But in this case, we'll see if we have a big down day, I may toss in even more. But here's the 3 buys. And A.O. Smith was the first one at 31.55, KKR at 28.67, and then Oracle at 39.77. All 3 of these stocks pay a pretty low dividend, but they've been really good growers. I'll show you over here on my tracking spreadsheet with those 3 here. See if I can pick them out real quick and show you how they've done for me. Like Oracle, I've had so far a 47% return, and my average share price is at $81.54. Let's see if we can find the other one. A.O. Smith, even better at 54.34%. You can see my average share price $56, and right now it's at $85. And then KKR, I've more than doubled my money with this investment. What KKR does, if you're not familiar with them, is they buy up companies that look like they're going to grow, have really good growth potential, and they want them to grow even more. And they usually have between like a 3 and 5 year time frame where they like to like double the size of companies, and then they sell them. So that's what they do. So what I like about their model is they don't hold on to something until it crashes and burns. They grow it and make a big profit on it, and then they sell it. And so looks like Wall Street agrees with their methodology. My average share price with KKR is at $49. Right now it's at $98. But you can see the dividend is really low, even though my yield on cost is 1.4%, which is nice. And they just had a 6% dividend increase, which is good. It's respectable. You can see A.O. Smith, they had a 7% increase in October, along with that gain there as well. But you can see, though, I don't get a whole lot of dividends. So KKR, not even $3. A.O. Smith at $3.35. Then we go up to Oracle, and they didn't have a dividend increase this year when it was, I think they do it every 2 years. And their last dividend increase that Oracle had was, I think it was 25%. It was huge, but they don't do it every year. So hopefully next year, Oracle will do another, 20-25% dividend increase. So you can see with the low yields here, my dividend income is not going to go up a whole lot. And that's okay, because I have 3 solid stocks that I put more money into, dollar cost averaging into them. But I don't think we're going to break the $900 mark with these buys. If I would have bought more, say Verizon, or something that pays a higher dividend like BST at over 8% at current, but I think it's a good idea to have growers in there as well as good dividend payers like an O, and General Mills, or there's Verizon right there, over 6%. You can see, even though my average share price was Verizon, I've paid more for it than the current price. I'm still ahead, is really because of what the dividends have paid me. My total dividends collected have saved me. If Verizon didn't pay a dividend, I would be upside down in that investment. So what I'm going to do next is I'm going to grab the data from M1 that's going to update my new number of shares in KKR, Oracle, and A.O. Smith. Let's go back to M1. So again, it's not going to be a big difference in my dividends at all. But that's okay. I'm long on these companies, so do a copy. So what I'm doing is I'm just going to the Holdings tab of M1. It shows everything in my portfolio from the largest position, SCHD, to the smallest position, which is Pinnacle West. I take this data and I paste it into my M1 data tab, which is going to update 3 columns. It's going to update for the new values for the average share new average share price for these 3 stocks, as well as the number of shares in my cost basis. That's all it's going to do. So M1 data tab, paste special, and I'll leave a link below to this sheet, so you're welcome to use it if you have a lot of stocks at M1. I think it's useful, so you don't have to use services that utilize Plaid and wait up to 24 hours for updates, because this just updated right now in real time here. So my monthly cash flow average has gone up to $899.74. So we're going to carry this amount over to the monthly average dividend tracking tab. Scroll down here. A lot of entries, because anything I do, whether I buy or sell stocks or there's a dividend increase, I track all those moves there. And you can see with Apple, on the 2nd, they announced a 4% dividend increase, and that added a whole 5 cents to my monthly income. No surprise, because Apple is not really a big dividend payer. It's a growth play for me, but they do pay a dividend, and a growing dividend. So you can see here in the 6th, this is what I've added here. This is my $100 deposit. buying fractional shares of those three companies, the Oracle, A.O. Smith, and what's the third one? KKR. So those three, and that added a whole 10 cents to my monthly income. But these little changes, though, if you add them all up, just take a look in May, just so far. Pepsi had a 7% dividend increase. I took my BST and JP Morgan dividends and I dripped those. KKR had a 6% dividend increase. Verizon, General Mills dividend drips. So this is what I've done so far in May. We can see this is what it's added to my dividend income. So it's added every month going forward an additional $4.18. That just keeps compounding. And of course there are events where it does get reduced, but really the big one was SCHD, where they historically pay that lower Q1 dividend. I'm thinking of just doing on my sheet maybe like an average dividend for SCHD, just so I don't have those rises and falls, but we'll see. And also I won't have to explain all these changes to the monthly income. It'll be smoother going forward, but we'll see what I come up with. But this is temporary, the $50 drop, but it's regaining. We're close to that $900 mark again, and especially in June I expect SCHD to have a higher dividend. We'll see how much higher, but it's going to put it well over 900 and probably to all-time highs of where I was, or close to it, where I was at the 936 mark and then dropped down. So it's getting better there. So let's take a look at, let's see here. We'll go to the Dividend Tracker tab, and we can just take a look at, this is where I track my portfolio value. Starting in January 2021, that's when I started doing these videos. You can see the starting balance there, $18,700. And we can see how the portfolio has grown in value. Also how the dividends have grown in value. You can see the dividends are larger, of course, for the third month of each quarter, which is every March, and June, September, December. And in May, I'm expecting the largest dividend ever too. I'm expecting it to be over $15.50 in June. We'll see what it's going to be in May. Definitely over 600, but we'll see how much higher than 600. We'll see at the end of the month, and of course I'll do a video on that, showing you the dividends I received and the proof by actually going to M1 and showing you in the activity log that the money was received. You can see the quarterly dividends as well, quarter-on-quarter increase, and as well as annual dividends as well. You can see in 2023 I exceeded $10,000 in dividends just from this portfolio alone. You can see here's the average monthly dividend. Started tracking that in May 2021. That's gone up. But of course I expect every Q1 with SCHD to announce that lower dividend is going to drop momentarily, but I expect this will get close to $1,000. We'll see by the end of 2024. At least I'm very hopeful. Put the $100 deposit in there because this morning I did the $100 deposit, and again I had auto invest on. That's why I didn't do my normal 5 picks, but I think Thursday, Friday I'm going to do an additional video where I will do those 5 picks, and you'll just have to wait and see what those are. So I think we covered everything pretty much, yeah. In this, I go over also my total net worth, and there's been a little bit of a recovery. You can see I have IRA at Vanguard, as well as a taxable brokerage account in Boring ETFs. Here's my 401k with T. Rowe with my current employer, and here is an IRA with M1. This is from my prior employment, and that's what most of that is. And the IRA here, this is mostly cash of me putting in, the $5,000 or $6,000 per year of my own money in there. And let's take a look here. But just adding everything up, I don't want to go over everything, but still well above the 1.5 million mark. But of course, a lot of this is dependent on the stock market. Since I'm so heavily invested in stocks, I know this is quite volatile. We'll see though. Hopefully get over 1.6 here pretty soon. So that's all I had to show you for this video, was those 3 stocks. And we'll see if on Monday or Tuesday whether I do the algorithmic pick by M1. But I will do, again, another video for a total of $200 invested per week. We'll see how long I do that for, so I can do both of those. So let me know what you guys think, if I should do both, with have M1 pick in one day and then me pick in the next, because I've had M1 do some good picks for me before, when I had M1 just do my mind for me when I had everything at their targets. And sometimes it was buying things I really didn't want to buy, but in the end it really worked out. And one of those was Exxon, where Exxon was really going down and it was buying it in the 40s, and I didn't have a good feeling about it. But the good thing about when M1 does that, it takes the emotion out of it. And as long as you have companies in there that are good long-term companies, then you're just buying at a discount. I think one of those right now that's going on is Starbucks. I know they didn't have the earnings that they wanted, but I think it's going to be temporary, because I don't think Starbucks is going away. I think they're going to be adding more and more locations, and they have a loyal customer base, so I don't think they're going anywhere. They just had a bad quarter with some bad news, but I think Starbucks will be coming back. So looks like I gave away one of the companies, one of the 4, but I haven't made the decision yet. But it looks like I think I'll probably pick Starbucks. We'll see on Thursday or Friday. But that's all I had. Thanks for sticking to the end of this video. If you got value from this video, please click the like button. Also subscribe so you do not miss future videos. Everyone take care, and everyone have a great week.